Heyo, everybody. What's up? What's going on, folks? Welcome to the True Trading Group live stream. What's going on, everybody? My name is Michael Edward, former award-winning hedge fund trader, now the current head trader at True Trading Group. And for those of you that do not know, TTG is the fastest growing and highest rated premium educational platform available today. And if you guys are ready to learn, trade, and profit for real, you've come to the place. 6 nights a week, Sunday through Friday, we go live right here on this YouTube channel, totally for free, where myself, other TTG Pro Trader moderators, and special guests will drop golden nuggets and provide you guys with free lessons and education that can help you to become a better trader. Take a moment right now, smash that like button, guys. Subscribe to the channel. Make sure you share this stream on your own social media. We're live right now on YouTube, Facebook, Twitter, and Twitch. Welcome everyone joining us on those different media platforms. Reach out. Let's share this stream. Let's educate and empower as many retail traders and investors as we possibly can. Guys, what are my goals on all of these live streams? And boy, do I have a phenomenal live stream in store for you guys today. A very special guest is going to be joining me here in just a couple of minutes. My goal on these live streams, though, is very simple: to provide you with value and education. But why should you listen to anything that we talk about on these live streams? Guys, I didn't figure any of this stuff out on my own. Okay, I began my career working for a hedge fund in New York City right out of college, my very first job in 2007. Then 2008 happened, which was the housing market crisis, the Great Recession, the stock market crash. Through all of that chaos, I actually went on to receive one of the firm's Trader of the Year awards in 2008. But before they ever let me touch even a single dollar of their money, I first had to go through an educational training program. I had access to some of the top trading tools, and I was part of a community of like-minded traders, and that is exactly what the TTG platform is based on now here today. Guys, we have a huge live stream in store for you. We have been blessed with some very amazing guests previously on this live stream. We've had Boris Jordan, we've had Tim Seymour, we've had Matt Kors, Trace Trades. We've had a lot of special guests on this live stream tonight. But tonight, guys, we have another amazing guest for you all. I want to welcome everyone, give a huge True Trading Group welcome to our guest is the senior economic reporter for CNBC, someone who I personally listen to on a daily basis, whose opinions and analysis I respect greatly. He's an Emmy Award winner, Pulitzer Prize winner, and guitar player and lead singer of the Stella Blues Band. Everybody give a big warm welcome to Steve Liesman. What's up, everyone?
Hey, nice to be here. Thanks for the warm welcome and the great introduction.
Yeah, Steve, I got to tell you, I really want to thank you so much for taking the time out of the day. I know you're a very busy guy during the day. You have a lot going on, and to take some time to come on here with me and the rest of the TTG family to talk about some macroeconomic points on what's going on in the markets. There's so much going on. So many people have so many questions. And from someone that I look towards on a daily basis, we have a lot of people on the live streams that come to me and ask me questions, and you're someone who I go to for analysis on a daily basis. I watch all your segments on CNBC, have for many years. It's a pleasure having you on here with us tonight.
Thanks. I appreciate that, and I apologize in advance for the fact you have to watch me every day, but some people feel they and just so you know, I'm taking a little time out for preparing for a gig I'm doing Friday night at the Capitol Theater. We're reopening the Capitol Theater, which has been closed since March of 2020, which, I don't know, maybe that's kind of an economic thing that we ought to talk about, which is, I don't even know if this economy is opening up or closing again. It's a good question, but we're supposed to be playing this gig. It's a free gig, by the way, if you guys want to come out to Portchester.
Awesome. Yeah, guys. Yeah, everyone, mark it down on your calendars. Like I said, Friday, September 10th, the world famous Capitol Theater in Portchester, New York. If anybody is in that area, the show starts at 8 o'clock. Make sure to go check out Steve and the rest of the Stella's Blues Band. Awesome. All right. Well, Steve, I've got a lot of questions here for you on a bunch of different topics. Some questions that I've gathered from our viewers, our members, a bunch of different topics that I want to go with you. And we're going to dive right in, and we're going to start with probably the most common topic that I'm sure you probably get a lot of questions about is inflation, right? So many people are talking about inflation. It's something that we hear in the news cycle on a daily basis. And now we've seen several quarters of steady higher than what is expected inflation. And my question to you really is, and I know we got the beige book we came out today. Well, I have some questions about that as well. But my question to you is, like, at what point does the Fed change their stance to conclude that inflation maybe is not transitory? Like, what would have to happen for them to say this is not transitory? And then I'm also curious on if what your personal thoughts are, if you think inflation is in fact transitory or not.
So I'll start with the last one. I buy a bit of the transitory story, and I think the jury's out on the rest of it. I think there are definitely some things that created conditions for inflation related to the reopening of the economy. I think initially people were ready to get out and go and do their thing, and the businesses weren't necessarily ready for it. You still have supply chain disruptions, things like used cars, things like airline fares. All of a sudden, the influx of people into essentially the leisure and hospitality business, going out to restaurants, finding the people to bring them back. I think all of that was an issue, and people required higher wages to get back for a whole host of reasons. We can maybe have that discussion. I'm sure people have opinions on that. But I think initially it was the initial pulse of it was transitory.
Yeah.
What's happened is a lot of it has hung around for longer than I want to say the Fed thought and a lot of other folks thought. So the initial thinking, I'll go through the transition on this, was back in the spring, people thought it would kind of work out till the fall, but that hasn't happened. And then people said by the end of the year. And now the big change that we saw amongst a bunch of Fed officials, and I don't think it's enough for them to change policy yet, but a bunch of Fed officials, and we had them all on for our virtual Jackson Hole coverage, was that they began to believe that this inflation problem was going to linger into next year at least. They're still calling for inflation to come down over the next year, but the idea is that it lasts into next year before things work themselves out. We can go into the reasons why some Fed folks think they're transitory and why there's some questions about their assumptions there, including, whether wages go down, whether and the success, which is really interesting. And, I'd be just as interested in your thoughts on this as mine are, as I'm interested in my own. But one of the interesting stories here, and you guys do companies. I'm like the janitor at the joint there. I don't do windows. I don't do companies. Everybody else does companies. I do macro policy. I do Fed policy. I do fixed income stuff. But it is extraordinary that companies have found a way to profit amid much higher input costs. And they've done so by gaining efficiencies. They've done so by raising prices and being able to pass those prices along. We're hearing some front end stuff about some resistance that's come to the ability for companies to raise prices. That's where I would start to look out on the profit picture. But what's happened here, I think, from a stock picking perspective, is you've got to pick your companies one by one in terms of their ability to find those efficiencies to deal with higher input costs and their ability to pass along those costs in the particular market they're in. I think in the initial wave, it worked out okay. And companies beat, and they beat by a wide margin. And that's why I think we did so well in the second quarter. Not sure that's going to be quite as true in the third quarter here. I think it's going to be much more selective.
Yeah, I agree 100% with how before it was kind of a rising tide lifts all boats type of scenario with stocks. It was like it didn't matter. Once everything, the initial shock happened in 2020 and the Fed stepped in as aggressively and as quickly as they did, which I tell people all the time, and I try to educate people on how thankful people really need to be with the Fed and the moves that they made, because they acted so quickly, so aggressively, and it was required and it was needed, and it really caused or prevented a lot of other problems that could have arisen in different areas, like in the credit markets and other things. And it really was something that created this huge rally. But now I agree that it's not, it really is going to become like that stock pickers market where there's still going to be opportunities out there. But I think that you're not going to see just overall sector performance. I think you're going to see opportunities now where you will clearly have, operating within same sectors, some companies that outperform and some companies that drastically underperform, rather than just kind of being lifted with the tide.
Yeah, I mean, let me give you just a little bit about how the inflation process works. Everybody thinks, well, prices go up. That's not quite how it works. Customers have choices, and one of the things they'll do is they'll substitute. When you read economics textbooks, you'll see the idea of substitution of meat is very expensive. Maybe I'll have chicken. Now, I think some of you guys out there, your eyes probably started rolling back in your head. No, I ate chicken instead of that steak. But think about the idea of I can substitute. I can go and look for a cheaper price someplace else, see if there's a competitor there for that, or I can do without. So I think the initial impulse was people were filled with cash. There was a lot of stimulus out there, a lot of extra money, a lot of savings, and people had a lot of pent up demand. As we move along, people are going to start to make choices, and some of that resistance to higher prices is going to be hit. And just like you say, one by one, companies are going to have different experiences. Well, will I pay more for toothpaste or bleach? Am I going to go out once a week or twice a week for dinner, or maybe just once a month? Those are the kind of places where you're going to start to see some of the resistance and some of the attenuation of inflation over time, I believe.
Yeah, I agree 100%. And it's funny that from the first question that I had originally asked about the inflation, and then you transitioned beautifully into what my next question was actually going to be, which was going to be about, the price elasticity of the consumer, like seeing how the cost of inputs and raw materials are so high right now, but yet, like you mentioned, you have, companies operating at all-time high profits. I was going to ask you, like, do you assume that this is due to productivity and maybe, advancements in certain technologies, or is it more that, hey, we just kind of lay this on the strength of the consumer with, like you said, the stimulus? We had a very, very strong consumer coming out of the initial opening phase where consumer was cashed up. The consumer they had all that pent up demand. They were ready to go. And my question to you is actually going to be, if that's what this was, and that's kind of what I believe that this was as well, how long do you think the consumer is going to be able to take these increased costs? Because like you said, you're starting to get that little resistance. And I'm wondering, is that something that that is currently happening now? Or is that because, don't forget, now you have the holiday seasons coming up. And I'm curious on if the data that's going to be showed, I'm curious if that data is going to be maybe skewed a little bit, where you get a drastic slowdown because people maybe want to save up going into the holidays, and then a massive surge in spending again, where you get almost like the consumer looks really weak in the fall, but then going into the holidays, wait, the consumer looks really strong.
I think you asked really good questions here, and I think those are all central questions to the outlook. I think we can look at just the past couple days. September 6th, all the extra unemployment benefits from the pandemic expired. We also know, however, that consumers have a very high savings rate relative to what it normally is. So there's a buffer there. And what I did is I did a song that quoted I did a story that quoted a song the Dead did the other day, which is called "The Race Is On." And there is indeed a race. There's a race to replace those government benefits with salary and income from employment. And we don't know how quickly that's going to be, but your sense that there could be a dip in activity, which, by the way, we've seen already, mostly related, I think, to the Delta variant and some decline in people going out to dinner, some decline in travel. So there's two kinds of charts out there right now when it comes to tracking the economic impact of the various of the Delta variant. There's charts that go flat and charts that go down a little bit. We're not seeing the big drops we saw back in March of 2020 and after that from the different waves of the virus. Right now, we're seeing flat to down. So we have this progression going up. And by the way, these are my patented air charts that if you use them, you have to pay 57 cents. It's a small copyright fee. But they were going up and going up pretty good. July was a great month. I'll just give you an example. The Beige Book in July had 9 references to COVID, and it said the economy was strengthening. In the Beige Book that just came out today, there were 22 references to COVID and 32 references to the Delta variant. So this was something that was barely in the Beige Book in early July, and it was all over the Beige Book in late August. So there's been a pretty market turn in sentiment. You can see it in consumer sentiment, a market turn in views about what the outlook is, and you are seeing some marking down of GDP. Why does that all matter for your stock or your stock portfolios? Well, GDP is the pie from which earnings are extracted.
Yeah, it's almost, Steve, it's almost like you and I maybe planned this, because you're segueing right into all of the next topics that I wanted, that I had questions actually to you about, and it was about the Beige Book. All right, that was something I kind of wanted to talk to you about. And because I did catch your segment today about the Beige Book when it first came out, like I always do. I'm always there right when the Fed releases their minutes, right when they announce their rate decisions. And I'm there watching you as it unfolds, as you And I got to ask you, how do you read all of that information so quickly?
Well, I guess if you do something for 20 years, you get good at it despite yourself, I guess is the best way to do it. I do an awful lot of prep. I do an awful lot of prep for a minute or two of television or 5 minutes of television, whatever it is. I read the prior beige book. I reported on the prior beige book, and I reported on beige books for about 20 years every time it's come out. I think I've missed just a couple over the decades. I know what I'm looking for. I know what I think I'm going to see, and I am able to contextualize it relatively quickly. And I mean, the first thing is to not make any mistakes and be accurate, and then get the news out as fast as you possibly can, because there's two things that are happening. There's news coming over the wires, and people are reacting. The Facebook's a really funny report in that, as things go, it doesn't capture anything in a number, but it does give you this sense of what's happening in the economy. When the Fed says, economic activity was modest, when it says that prices were going up in strongly in half of the districts and moderately in the other half of districts, you really get a sense. What people don't understand is maybe they don't understand this. Fed officials are constantly talking to businesses. They have boards of directors that are key businesses in their regions. They're constantly reaching out for this kind of information about what's going on in the real economy. At least they're trying. I mean, I know there's this thing about them being all these academics and pie in the sky, and perhaps they take some of that information and turn it into academic gobbledygook that's hard to understand. But they are really going out and trying to talk to businesses and get that real feel for what's happening out there. And a lot of what you hear, a lot of what they're hearing is put into the beige book. So you're hearing from key employers, key businesses all over the country. You can get what's going on in the farm world from the Kansas City Fed's report. You can get what's happening in the energy business from the Dallas report. You get a lot of travel and stuff from the New York report and retail and office space, what's happening there. You get tech reports from Boston and San Francisco. So you get this incredible consolidation of all the different businesses and industries around the country. I really like the report. And it's funny, CNBC has stuck with it, even though, there was initially some idea, well, maybe we should not make such a big deal about it. And I think, Adam, you're right to tune in and make a big deal of it, because it really does provide a contextual sense of the economy in a way that numbers don't often do.
Yeah, definitely. I think it's something that's important. I try to tell our viewers to have them to understand, when to look for these things, when these things are coming out, and to always be paying attention. And
let me just interrupt you and just to say, people could call up the Facebook, read the first 2 pages. It's a great summary of everything in there of what's happening in the nation, and then there's a summary of each district page by page. Just a one paragraph, 1 page about what each district is saying and the main issues there. And you can do like I did today, which is in about 3 seconds, I did a word search. I said, tell me how many COVID mentions, how many, and you could find that out. When, I can't remember when it was, but maybe it was July or June or May. I can't remember what month it was, but we did a search on supply shortages. And all of a sudden, as you know, that became a huge deal and was the cause of all the inflation out there. So it really is giving some leading edge information.
Definitely helps to provide, like you said, context behind a lot of the things that people hear about, a lot of the data that comes out. Everybody sees all these data numbers that come out, CPI this, PMI that, and people are like, what does this even mean? A lot of people don't understand what a lot of these data points mean, but that's why I think it's important to read something like a beige book and get some context behind it. Well, anyway, Steve, you do a phenomenal job. The best out there by far, man. It's hat off to you on how amazing you report on all of these different things. But so going back to the beige book, like you said, the Fed highlighted today Delta variant, which wasn't there previously. They actually talked about a slowdown in growth. And now my question to you kind of shifts over to the taper discussion, because do you think now that you're starting to see the Fed talk about and focus on Delta variant, talk about and focus on a slowdown in growth, do you believe that this slowdown could now postpone even further out any type of Fed announcement regarding a taper schedule? There's a lot of people that were talking about maybe thinking that the September 21st, 22nd meeting, that there was going to be some discussion of a taper schedule. Do you think that the slowdown, or what you read from the beige book today, do you think that maybe it's even further away?
I'll tell you what I think and what I reported. I was among those people who reported and thought very, very keenly that the Fed could announce in September that they were going to taper. I did this as the information about the Delta variant was gathering, and it wasn't available yet. But there were a lot of Fed folks that were talking to me and telling me, this thing, we want to do this thing. We want to get it going. It was before all this data became available and the surge in the Delta variant. So I thought, sure, they were going to do this. Then the Delta variant came along. And now I don't believe they're going to do it in September. I do believe they'll do it in November. I'm virtually certain they'll do it this year. And I think the question to have for investors, and I don't know, it seems like you guys do some short-term stuff. I hope you do some long-term stuff for sure. But I think the question for investors is how much that really matters. And when I think about it, does the Fed taper in September or November? I think for short-term traders and macro event funds and stuff like that, yeah, it matters. But for long-term investment, I don't think it matters, because let me give you some numbers here. If the Fed begins to taper in January, they're going to go down by $15 billion a month. They're still going to buy about $750 billion worth of assets as they're coming down. So there's still going to be plenty of liquidity.
Yeah.
Until they're done tapering, you can probably rule out any possible rate hike, which gets back a little bit to your first question, which is, unless they start to panic and get really worried about the inflation numbers, that might pull the whole thing forward.
Yep.
But in general, the Fed's announced sequencing is to first taper down to zero in terms of asset purchases and the increase of the balance sheet, and then think about raising rates. So I know we have some guys on the FOMC who we've interviewed and had on CNBC who want to get this thing done by the spring. It looks like they're probably not going to start at this point until January. And so whatever 15 divided by 120 is about 10. So you're probably not done tapering until November. And you probably don't have the Fed considering the first rate hike until December, maybe January. Remember, Richard Clarida, the vice chair, said he thought December for an announcement of 2022, remember?
Mm-hmm.
I think 16 or 17 months down the road for the first rate hike. Now, when you ask yourself, how easy is policy going to be? Let's do the math. You're at 8.3 trillion. That's trillion with a capital T in terms of the total assets on the Fed's balance sheet. That is double what it was before the pandemic. You're going to add another $750 billion. Call it that you get to 9 trillion even. The Fed is not even talking about taking actions to reduce the balance sheet, maybe let it run off. And then what are you talking about? Sometime in the first quarter of 2023, you're going to have 25 extra basis points on your short-term funds rate. It's hard for me to imagine, I think, a more favorable monetary policy environment for the equity market, and B, any kind of real damage that comes from that monetary policy relative to earnings or corporate debt levels or anything like that. The only main argument for why this is a problem would be you'd have to think, and there's a decent idea out there, that this whole thing is one overinflated bubble that has a big hole ready to go at the top that requires a constant and ever-growing influx of air to remain inflated. May be true in certain asset classes. I don't know. I don't really like to tell people, is the market too high, too low, or not? But I'm just saying to you that over an extended period of time, if Powell and the Fed are able to have their way, it strikes me you have a very favorable environment for the stock market and for economic growth.
Yeah, that's excellent insight, and kind of breaking that down for people is actually really, really helpful. Thank you for that response. And I actually, something that I have been very vocal about on this channel, and with, when you said, we do, and just so you know, like that True Trading Group, we do short-term, like active trading. We also do a lot of long-term portfolio stuff. And I'm always talking, people through what I'm doing and different things from the long-term macro perspective, and really just educating people on how to be able to get themselves involved more in the markets and to understand what is going on. And the way that I have, this is my opinion, these are my thoughts. with regards to the Fed when it comes to that potential rate hike period, which I also believe is very far away. And I've been telling people that, I thought some of the reason why people are being obsessed with the taper and the taper schedule is for one of the exact reasons that you had just mentioned, that people are worried that, okay, well, we've got to taper first before we can even think about any potential rate hike. And I agree with you on that part about we're not going to get any type of rate hike until the taper is completely finished. And I think the reason why those rate hikes come is extremely important. And when people ask me about, a stock market crash or a bubble or something like that, I say, listen, just a rate hike, if the Fed raises rates because they were right the entire time, they were right about inflation, it was transitory, unemployment's back to full employment, and they're raising rates because they can and because they would like to, that's different. I feel like the markets are going to be able to withstand that rate hike much better. I think it'll be a slower, steady raise versus if the Fed raises rates because they're wrong about inflation and they're raising rates because they have to, not because they want to or because they can, to get in front of inflation where maybe are not back at max employment. That is when I think that the impact of those rate hikes will be much more severe. And that's when I think you can get a lot more of a deeper pullback, which a lot of people are concerned about and are worried about. And I'm curious if your thoughts on if you agree kind of with my thesis there, my analysis with regards to the rate hikes and the reason behind the rate hike.
I think you nailed it. I mean, you can take Lipitor, you can have open heart surgery, right? Take your pick, right? And I think that's the way to think about it. You can manage your cholesterol now, or you can have open heart surgery later. And by the way, Bullard didn't put it that way, but that's essentially why he believes the Fed ought to get on with the taper right now, is to stop giving, inflation any excuses for going higher. He believes the faster they get done with the taper, the less likely it will be they'll have to raise rates for just that reason. But I think you put it really well, and I really like the way you frame that, which is there's two different ways they could be raising rates. Raising rates because it's the right thing to do for a growing economy, where that is proportionate or able to deal with higher interest rates and the Fed clawing back some of its ability to fight the next recession, or doing so in a sort of panic mode where it needs to get in front of inflation. I will say this. My producer gave it this name, but he called it the gunslinger speech that Powell gave. And that idea of wanted dead or alive. Powell said that there won't be inflation, either because it will go away or we'll make it go away. So if you're thinking really long term, and I don't know how long term you have to think this, you're right. There would be a short-term dip if the Fed had to raise interest rates to get in front of inflation, and a decline in the market almost certainly as a result of that. But if long-term the Fed is indeed dealing with the problem that you are concerned about for your stock portfolio, then I'm not sure how long-term that problem is. Powell's notion was one way or another, we'll deal with it.
Yeah. I like to tell people, depending on your time horizon, depending on your risk tolerance and where you are in your life, I tell people that, when you get these big pullbacks in the markets, you take advantage of them. They're opportunities in my eyes, like, in March and April of 2020. I mean, we were, buying with both hands, and it was, I just look at it as, if we do get something like that, I think it would be a good opportunity to grab amazing quality companies that continue to just put out tremendous earnings growth and advancements with technology. And you'll be able to do it at valuations that are far more attractive than where they are today. And it doesn't really change the long-term outlook. Do I think we get this massive V bottom like you did in March? Maybe not, but I do think that it provides tremendous opportunity. And it's like everyone that's listening to this live stream right now, you guys just remember a lot of the topics that we're talking about right now. Some of these things might be seen foreign to you, might be kind of over your head. But again, this is the importance of why we do these live streams, why we continue to focus on education to empower the retail trader, retail investor, so you guys can level the playing field and not be scared of these different topics, and to be able to take advantage of opportunities when they present themselves. I've got a couple more questions for you, Steve. I don't want to take up too much more of your time. This one kind of rolls right off the Fed and continue on with Powell, because he's been very vocal about really only wanting to taper when there's substantial progress made in the employment market, right? He's really been a big stickler on employment
Can I
progress.
correct you, Adam? It's substantial further progress.
Substantial further progress, yes.
Yeah, get that.
Substantial
Get that
further
right.
progress,
Otherwise,
right?
the whole operation goes to hell.
Right. It's always got to be further. It's got to be more. But so we just had a huge jobs number miss, right? We just had a huge job number miss. And I want to know if you think that obviously that this is kind of part leading off of the question I had before about the Delta variant, about how that probably adds to a potential postponement of a taper. But now my thoughts are, with the expiration of the unemployment benefits, do you think now that we see that wave of people coming back into the jobs market, that could be enough to satisfy whatever the definition is of substantial further progress in Powell's eyes? Do you think that cause effect of unemployment benefits expiring, do you think that's enough to bring enough people back into the jobs market?
So my sense of why there are a lot of unfilled jobs is includes the high unemployment benefits, but it's a lot broader than that. And I'm happy to go through that. The big thing that I'm really interested in, and part I'm interested in this because there's no data on this, and so that's the kind of thing that often piques my interest, but I'm pretty sure it's right, is this notion of geographic displacement. Look, as they have done for millennia, when there are plagues in cities, rich people leave the cities, and they've moved to suburban areas, and they've moved to even rural areas, and they've moved to their summer homes, and they've moved to the mountains and places like that. Low and moderate income people who might fill the jobs at the restaurants and the stores where these people are now shopping, they don't have the ability or luxury to move. So I think that's a big part of what's going on right now, is that you have the job seekers here and the jobs over there. And it takes time, and I don't know that that's ever going to really be bridged entirely. I think there's not a lot of talk about that. Another issue that's out there is if you go to a summer community and ask them, they'll think you're weird if you ask this, but ask them, where are the Bulgarians? Just as an example. And you say, why do you mean the Bulgarians? Well, for example, Cape Cod, a place I'm familiar with, they get something like 1,000 Bulgarian students every year to come in and fill jobs for the summer, for the influx of summer tourists. They didn't get here this year because of COVID, and because once the restrictions were lifted, the embassy in Budapest couldn't work hard enough to get those things. In addition to that, you had a decline in immigration that began in the Trump administration, where jobs where people were not allowed to come in the numbers they were previously allowed to come in. Add to that unemployment benefits and the incentive for some people, not all people, but some people, to remain out of work instead of going to a job, for example, where it may be too far away. They may have health concerns. And on top of that, I would say the schools. The schools are a really interesting part of people are and are not going to work. So all of that is by way of saying, in the first order, I think the August jobs report was a little squirrely from seasonal adjustment stuff. I don't think that job growth is as weak as 200,000. That said, I did predict the entire week, for what it's worth, a weaker report than the consensus was expecting.
Yes, you did.
The frequency data was telling us that the Delta variant was really sapping some of the strength of the leisure and hospitality business, which did a big goose egg in August after doing something like 240,000 jobs every month. So the whole return to work in the leisure and hospitality business, they lost jobs in bars and restaurants. Jazz Fest was canceled. You can imagine the employment around that. So I think you tell me when this Delta variant is going to be over, I'll tell you when we'll get back to that strong job growth. Note that when we had the all clear, which was back in July, they added something like 1,050,000 jobs. The month before that, they did 800,000+ jobs for, just about 2 million over 2 months. So we can and will put people back to work when we get beyond all of those issues I put out there, of which I do put the unemployment insurance as one of the issues, just not the only issue, which I think is wrong.
Yeah, definitely. Thank you for that. A lot of, just like everything else right now going on the macro stage, a lot of different variables, a lot of different factors that are at play here. I think I'll I've got one more topic that I would love to kind of pick your brain on a little bit. Even myself, I'm a little, was doing some research today to see maybe how this may affect markets. A new term has started to flirt around the news headlines, and that's the debt ceiling, right? And over the last couple of days, we've started to hear some discussions about this. We've been hearing some discussions about the debt ceiling. Can you just give us some insight as to what issues, if any, this topic could cause for equity markets?
I would say if the stock market declines because of the debt ceiling, that it's a big buy. I've been through this so many times. I feel like the part of my brain that might be dedicated to worrying about the debt ceiling is completely calloused over and numb to any possible panic here. I hope I'm right about this, but the idea is that the opposition tries to make you panic, and they've done this. I don't know how many times I've been through this, like 10 times. They go right to the brink, and then they cave and they don't default on the debt, et cetera. I guess they did once in the Obama administration, whatever. But the end of the day is they will pay. The U.S. government will pay its debts, and it is the objective of those who want to do whatever it is they're after. In some cases, it's spend more. In some cases, it's spend less. Usually, it's spend less, or create some kind of limit on debt. They will try to create the kind of panic that will cause stocks to drop and all kinds of things to happen, but it doesn't ever happen. I will report it. I will try not to be breathless about it. Some people will be breathless about it. I don't think it's a breathless topic. I do want to come back to one thing I didn't talk about because it's on my mind here. You did talk about productivity, and that's a very big deal for me. It's a very big deal for economics. It's worth pointing out that sometime in, I want to get this right, I think it was April or May of this year, we began producing the same GDP we were producing before the pandemic. We've since exceeded it, by the way. But in that month, we started doing the same GDP with something like 6 million fewer workers or 7 million fewer workers. That gap is pure productivity.
Wow.
Stuff has happened over the time of this pandemic. We figured out some things of doing things better, doing things with fewer workers, generating the same amount of output, doing some of it domestically, less of it perhaps overseas. And I don't think that stuff goes away. I think that one lasting impact, positive impact of this pandemic will be some of the business processes and technologies we put to work to perhaps do things more efficiently. I'm going to try to avoid some business travel that I had before. And I think that makes me more efficient. It certainly gives me more time to practice guitar.
Excellent. That's an amazing point. I did not, that's not something that I had considered. Thank you so much for sharing that insight. That was something to definitely keep an eye on and definitely look for. And I would agree with, that realizing that 6 million job buffer, that's all productivity. And I didn't never thought of it that way. That was amazing. You see, I gotta tell you, man, thank you so much.
Do you mind if I plug one show that's near and dear to my heart?
Absolutely, man. Go ahead. Go for it.
I just want to do this real quick. We every year we did a show, Free Debt in the Park. We got a bunch of sponsors and we're able to do a show to benefit Riverkeeper, which tries to keep the water clean for the Hudson River. And I'm on the board of directors of Riverkeeper. And we did that for 3 years in a row, and we've been able to do it the last 2 years. So October 1 in Peekskill, which is on the Hudson River, as you might imagine, at the Paramount Theater, we're going to do a benefit for Riverkeeper. The Stella Blues Band will give you 2 sets of Grateful Dead. Now, what's happened is we've had 2 sponsors step forward, 2 families that really care about this, and they're sponsoring the production of the event. So every dollar you give for your ticket goes to Riverkeeper. That's where we're at right now. And I know that there are a lot of needs out there with COVID and everything, but the needs of the environment march on, and that's something that's near and dear to my heart. So if you want to buy a ticket and come, please do. If you want to buy a ticket and not come, please do. Your money will go to Riverkeeper. So thank you for letting me plug that. Absolutely.
Well, Steve, where could people get some more information on the event, or where could they get a ticket?
They can go to Paramount. I should have it available. Go to StellaBluesBand.net. We'll direct you there, or Stella Blues Band on the Facebook page if you want to do that. Thanks very much.
Awesome. I think Adam just joined us.
Thanks, Mike. I appreciate it. It's good questions, by the way. Excellent questions.
Steve, do you guys need sponsors for that event?
We would love sponsors for the event. Yes, we would.
All right. Well, I think True Trading Group would like to help sponsor your event.
I would be more than pleased to have that happen. We'll add you to the poster right away. That's
consider it done. We'll
consider it done.
Consider it done.
That's super cool. That's super cool. Thanks.
You're very welcome.
Absolutely. Excellent. Well, Steve, thank you so much again, man, for joining me here today. Like I said, I value your reporting, your analysis. I watch you every day. It was a real honor having you come on here and talk shop with me. We do our best here at True Trading Group to continuously educate people and to really level the playing field. I think it's something that is very, very important for the retail trader, the retail investor to be educated and to level that playing field. It's something that we are very passionate about, and to have
you know the issues. You asked the right questions, and those are the questions I think that people have to think about. So I was really pleased to do this.
Awesome. Excellent. Steve, thank you so much. Everyone on our live, give a huge TTG thank you to Steve. An amazing guy. Thanks for joining me tonight. Enjoy the rest of your evening. And even though you don't know it, I'll see you tomorrow.
See you tomorrow. But for ECB at 8:30 and Chalmers claims.
Yes, that's right. 8:30. We got some data coming out tomorrow. I'll be watching for you, Steve.
Thanks.
Thanks a lot, man.
Bye-bye.
Have a great night. All right, man. Wow, what a stream. What an amazing stream. Guys, how incredible was that? Steve Liesman, awesome guy. Hell of a guitar player. But even better economist. Right? So it was an absolute pleasure. It was an honor having him on. Thank you again, Steve. And guys, listen, go ahead. Go check out their show. You guys, if anyone's in the New York area, the Stella Blues Band, you guys can go check them out. Go to their website. Go check out some of their shows and go show Steve some love. All right. We'll provide more info. We're gonna sponsor that event. We'll provide more info for anyone that also is interested in that event that Steve was talking about there at the end. But True Trading Group, it's going to be our pleasure, our honor to sponsor that event. All right. So there you have it, guys. I guess maybe what we can do now. Let's see here. Give me 1 second. One second here, guys. I'm getting myself situated here. All right, guys. Okay. So to get myself situated here, I've got a couple of different lessons that I want to talk to you guys about here tonight. Before I get myself into the lessons of the night, I've got EFTR. EFTR 56% gain today. Okay. EFTR 56% gain. There's a couple of lessons that I want to walk you through. Okay. There's a couple of lessons I want to walk you through regarding EFTR. We're going to talk specifically about how to use volume to identify buyable pullbacks. Okay. How to use volume to identify buyable pullbacks. That's what we're going to talk about on EFTR. We're going to recap that trade for you. Before we do, I want to just take maybe 5 minutes. Literally, I'll take, because I'm sure some people have some questions, right? Some people might have some questions about some of the things that Steve and I just spoke about, or maybe you have questions about the stock market or stocks in general. I usually always do like a 15, 20-minute Q&A to start off my live streams. We dove right in with Steve. It was a blast. I'll take about 5 minutes of questions. If anybody has questions, okay, about anything. Steve got the last laptop. Yeah, he might have. Steve might have gotten the last laptop. I got to check with Adam. He might have had to give him a laptop. I'm not sure to get him on here. We'll have to see. But yeah, guys, like I said, I'll take a couple questions. If you guys have any about anything, literally, there's no such thing as a stupid question. You got a trader. I've got 17 years of experience. I'm literally telling you guys, ask me anything, whatever it is that you guys want to know that you're curious about. Go ahead, fire away, ask me some questions, and then we're going to dive in and we're going to talk about all the lessons from EFTR, which is how to use volume to buy pullbacks. Guys, we've got 10 laptops left from last night. Okay. So that's it. We've got 10 laptops left for the next 10 people that join True Trading Group. And then that's it. We've got no more laptops after that. We got 10 of them left. Okay. And then they are all done. We can't get our hands on any more laptops. So that's it. So the next 10 people that join True Trading Group will get a brand new free laptop. It's totally free. We also cover the shipping costs for you. We ship anywhere in the world. All right. So go ahead, guys, fire away. Ask me questions. I'll take I'll take one or two questions, and then we're going to dive in and get into the lessons on EFTR. Yes, it is. You can go read the beige book, Jeff. Yes, you can read the beige book. So that's what Steve was talking about. Steve was talking about before about like to read the different parts of the beige book. It's basically like notes from the Federal Reserve. That's basically what the beige book is. It's basically their notes. I'm on a hot streak at the moment ever since I started the TT training. Yes, and wonder if it's a good time to size up, and how do I do that? Heart Electrical. Excellent question. And I'm so glad that you asked me this question before you just did it on your own. So props to you for asking this question. Now let's talk about the answer. Now, when you say a hot streak, you got to define hot streak. Is a hot streak 3 days? Is a hot streak 3 weeks? What's a hot streak? That's first and foremost. I usually tell beginner traders when they're first starting out, be profitable for a couple of months before you want to increase your position size. But if you're not a brand newbie, you've been trading for a little while, okay, you don't need to necessarily wait a couple of months, all right? What you want to make sure you get yourself to a point where you are not only just consistently profitable, but you want to make sure that you are comfortable with your risk. So really there's two things that you're going to want to make sure that are going to tell you you're ready to increase your size. One, you're consistently profitable, right? That's obvious. The second is when you are in losing trades, are you able to just stop out of that trade and then just be like, oh well, and move on? Okay. Do you get nervous when a stock is starting to pull back close to your stop loss? Because even if you're consistently profitable, okay, if these things are still happening, which is you are nervous when a stock gets close to your stop loss, maybe your leg starts to shake a little bit, your heart starts to pound a little bit, you're like, you can't take your finger off the key, or if like you get stopped out of a trade, you're like, if that is still what you're dealing with, you're actually not ready yet to increase your size. Even though you're consistently profitable, you're not ready yet to increase your size. You got to make sure that you are 100% comfortable with your risk tolerance before you increase your size. Now, let's say that we've accomplished those two things, right? The consistent P&L and you're 100% comfortable with your risk. Let's say we've got that. Now, you're ready to increase your size because your confidence as a trader is at a certain point where you're ready to increase your size. The way that I suggest traders do this is by increasing their risk per trade by 25% increments. Let's say, example, let's say you risk $1,000 per trade. I'm just making up a number for easy math, okay? Let's say if every time you stop out of a trade, you lose $1,000. That's your risk per trade, okay? When you are ready to increase your size, you're going to go from risking $1,000 per trade. Now you're going to start risking $1,250 per trade. You're going to bump up that 25% increment, and you're going to make sure that for the next 2 weeks, you're still consistently profitable and you still are comfortable with your risk tolerance. Are you still able to stop out of a trade and be like, oh well, and move on to the next trade? Are you still able to see a stock pull down towards your stop loss and you not get nervous at all? If that is still the case, Great. Be consistently profitable for about 2 weeks, then increase by another 25% increment. And you do this process by slowly climbing the ladder until eventually you will get to a point where now you are no longer comfortable. The stock's going to start to pull back. You are going to get nervous. All right. You're going to feel differently when you're in the trade. That's your body telling you this is too much. Maybe you got all the way up to like 1750 and you felt, ooh, this is too much. This is too much. Okay. That's your body telling you, drop back down to your prior increment level, which will be 1500. That is your new risk per trade. And then you'll stay there for now, maybe a month or two until you get confident again, comfortable again. Remember, where you can stop out of your trade, not worry about it, move on to the next trade. You're not nervous when your stop loss is being approached. I can sit, you guys ask my members, I sit in my trades. A stock can pull all the way down to my stop loss. I don't even flinch. I don't even flinch. My heart rate, my pulse doesn't even go up by one single beat. It's because I'm very comfortable with my risk tolerance. Okay. So that is the point that you want to get to, because that is how you'll make sure that all of your decision-making is going to be based on something that is technical, fundamental. It's not going to be based on emotions. Okay. It's not going to be based on emotions, because once you start to worry about your position size, that's when you get emotional. That's when you make decisions with your emotions. That's when you make mistakes. When you make mistakes, that's when you lose money. And what are making mistakes? Those are selling winning trades too soon. It's stopping out too soon. It's getting back in. It's averaging down. All the mistakes that you make as a trader, that's when those mistakes come. It's when you get emotional with your trading. So if that's the proper way, or that's how I suggest people increase their position size. And then eventually you'll get to a point where you're ready to climb the ladder again. And then you'll start that process all over again where, okay, increase 25%, move forward, increase 25%, move forward, and so on and so on. Okay. All right. Okay, so there you have it, guys. All right. So I think that let's end the Q&A. Let's end the Q&A right there. That's an excellent question. Got a lot to go over here today, guys. I want to get to EFTR. It was a monster trade today, an absolute home run, 56% gain. This is a great Q&A session. Thank you, guys. For those of you that are not members of True Trading Group, if I did not answer your questions, which I'm sure I didn't because I only answered like 2, because I have a lot to get over and get through here tonight. Don't worry about it. I do these live streams 6 nights a week. Make sure to click the subscribe button and the notification bell icon. Make sure you never miss out on any one of these live streams. Speaking of new people, I'd like to know, actually, do me a favor, type the number 1 in chat right now if this is your first live stream with True Trading Group or you're not a member. All right, type the number 1 in chat right now if this is your first live stream or if you're not a member. All right, we got Haggis, we got Osama, Len Ramos, Shahida Banu, Abigail I Do, Quiet Pronto, Sanja Johnson, Michael, Ray R, Christine, Bogey, Moises Nunez. Great, guys. Excellent. So we have a lot of new members that are joining us here today. C. Fari just signed up, so there should be only 9 laptops left. Nice. Actually, I missed that. We missed this. Well, congratulations, Eddie. Congratulations, Eddie. Everybody, welcome Eddie to the True Trading Group family. We've only got 9 laptops left now, guys. That's it. Okay, 9 laptops left, and then we are done. No more. Chip shortage. Sorry, can't do it. No more. Adam has been able to miraculously get together as many as he has in the past, but we are all out after these 9. So you guys can use coupon code TTG121, and that'll get you guys that brand new free laptop. It'll also get your 42% discount. So you can the next 9 people to use that coupon code will get the brand new free laptop. Okay. Now listen, everyone that just typed the number 1, remember, True Trading Group is the highest rated Also the fastest growing premium educational platform for traders. That's all about results, because results matter. They matter at True Trading Group. Our results, your results, they matter. We help people reach their goals of becoming consistent, profitable traders by combining top-notch education, same education I received when I worked at the hedge fund in New York. And we combine that with premium trading tools from companies like TradingView, Benzinga, Quote Media, Trade Ideas, and more. And we're a community that shares the same goal, and that's to learn, trade, and profit together. If you've been watching our live streams for a while, you know that we've been steadily moving the price of our membership up. We've been adding a lot of features to the program and to the platform. Okay, we are walking the price of our membership up by a couple of bucks every day until we get back over $2,000. Okay, so we've only got 9 laptops left. This is it for the foreseeable future. Okay, these will most likely be sold out here tonight. Probably most definitely will be sold out here tonight. The 1-year membership to True Trading Group, guys, it is normally $2,212 for the entire year. However, tonight, until midnight Pacific, you can save 42%. It brings the price of your membership all the way down to just $1,282. And the next 9 people to use coupon code TTG121 will not only get that discount, you're also going to get the brand new free laptop. We even cover the shipping costs. It's literally our gift to you for joining the family. Think of TTG as the Netflix of trading communities, because you pay one price. You get access to the core of everything we have to offer for the entire year. With your annual TTG membership, you're going to get our entire 17-course curriculum. This is a simplified version of the stuff I learned working at the fund. There's beginner and foundation courses. There's advanced courses. There's options, trader psychology, swing trading, crypto, you name it, all our courses in text and video format, whichever is easier for you to learn. We also have Benzinga Pro's real-time live news feed. This is a live breaking up to the second news alert service directly inside of our chat room that gives you news as soon as it crosses the wire. See how Steve was talking about as soon as the news crosses the wire, he's on top of it? You need to make sure you get news at the same speed of which people like Steve get news, because the professionals are getting the news as soon as it crosses the wire. So you cannot rely on something like Yahoo Finance that's going to give you news 15 minutes delayed. You got to get at the same speed of the professionals. The Benzinga newsfeed helps us do just that. You're also getting Quote Media's full book level 2. That's going to show you all the market maker depth inside of level 2, not just the ones your broker shows you. See all the orders inside of the market. Then you're going to be able to use TradingView's premium charting software. This is one of the most commonly used charting softwares by active traders. Yours free. Again, guys, literally, you do not pay extra for any of this stuff. It is all included when you pay just $12.82. Then you're going to be able to use our trade simulator. The simulator lets you trade stocks and options with fake money with real-time data, so you can practice implementing what you've learned in the courses. Our simulator is the same simulator that is used at California State University, Fullerton, University of Wisconsin, Whitewater, Berkeley Haas, and Illinois Tech. You're also going to get our Trade Ideas scanner. That's going to show you what stocks are making new highs, new lows, having surge in volume. It's broken down into small cap, mid cap, large cap. So regardless what you trade, we can make sure you always focus on the hottest stocks during the day. You're also going to get our proprietary scanner. Okay, our proprietary scanner has the functionality of FinViz Elite with the power of streaming data from our partners at Quote Media. You're also going to then have access to our chat room, where you're going to be able to view our trading monitors. You're going to be able to see our screen with all the different moderators, because the different moderators share their screen during the day. We're also live on the microphone talking to you the way I'm talking to you now. We are literally on the microphone calling out our trades and identifying opportunities on the mic right now in real time. I come on the microphone, I tell everybody, guys, okay, EFTR, this is literally exactly what I said today. EFTR, I told everybody, go, guys, EFTR, we just broke through 20, heaviest volume of the day. I'm looking for a low volume pullback. I'm going to try to get long in front of $20. Okay, stop loss will be down around 18. That's literally verbatim what I said today in EFTR. My TTG members, you guys can verify true or false. Is that or is that not what I said in chat? I come on the microphone and I tell you exactly what I'm going to do before I actually do it. It makes it easy for you guys to follow along with my trades if you'd like. Okay, we're in chat with you the whole day. We're not just gone after 2 hours. We're there from pre-market till after hours, identifying opportunities, calling out trades. You can send us private messages and ask us questions during the day. Wouldn't you like to text a pro trader during the day and ask them an opinion on the stock? You can do that with True Trading Group and all of our moderators, not just me. There's 7 other pro traders that you can message privately and ask questions throughout the day. We're there to help. We're also sporting well over an 83% win rate in chat with all the moderators. We have a trading journal on our website that tracks all of our performance. You are welcome to go view all of it. It's there for you, fully transparent. We also do live workshops and webinars September 11th from 9 to 5 p.m. Eastern. That's all day, 9 a.m. till 5 p.m. Eastern. That's an entire day's work for most people. Our two top professional option traders, Momin and Chris, are going to be hosting Options Palooza. This is an all-day long virtual training session that is going to be teaching you everything there is to know about options trading. If you're going to be an active trader, I think you must learn how to trade options. You don't need to only trade options. I trade everything. I trade stocks and I trade options. I mostly trade stocks, but I also trade options. We trade everything in True Trading Group: small caps, mid caps, large cap stocks, options, day trade, swing trade. We do it all. This Options Palooza is going to walk you through buying basic calls and puts. It's going to then go over how to select strike price and expiration date. Then it's going to get into more advanced stuff. Advanced stuff meaning straddles, strangles, credit spreads, debit spreads, selling options for income, selling covered calls. This is a must-attend event if you guys are interested in learning how to trade options, which I suggest all of you should be. It's totally free for our members, as are all of our workshops. They're totally free for members, but it is a members-only event. Remember, that is September 11th from 9 a.m. till 5 p.m. Eastern time. That is our Options Palooza event. Will be held in the main chat room. You're also then going to be getting 2 small private study groups with your membership. This is going to be your chance to get individualized attention with the TeachD mod, communicate with other members, go over lessons on topics and things that you are struggling with to really get the help to help speed up that learning curve. You get 2 of those small private study groups with your membership. Then we do a lot of giveaways. September 12th, set your reminders, 8:30 p.m. Eastern, right here on this YouTube channel. I'm giving away $30,000 to one lucky TeachD member or a brand new Tesla. The winner is going to choose cash or the car. All you need to do is be a member. Every time TTG gets 300 new members, we raffle off a brand new Tesla or $30,000 cash. All you have to do is be a member to have a chance to win 30 grand or a brand new Tesla. That's going to be Sunday, September 12th at 8:30 p.m. Eastern live right here on this YouTube channel. Okay. And again, guys, the next 9 people to use coupon code TTG121 before midnight Pacific tonight, you'll get the 42% discount. You get the brand new free laptop. You'll be able to attend Options Palooza, and you'll be able to have a chance to win $30,000 or a brand new Tesla on Sunday, September 12th. You have to actually enter the coupon code TTG121 and then click apply code at the checkout in order to get the discount. You'll know you're getting one of the 9 laptops if you see the laptop in your checkout cart. If you do not see the laptop in your checkout cart, that means we have sold out completely. We also do offer a money-back guarantee, folks. I stand behind our platform. I put my money where my mouth is. I'm so confident in the education and the platform that we provide at True Trading Group that I'm willing to offer you a complete, full refund, a money-back guarantee with your membership because, like I said, TTG results matter. They matter. Your results matter at True Trading Group. The reality of the matter is that 80% of our members, over 80% of our members are successful, meaning they're making money and they're becoming better traders. And if you don't believe me, watch this. Guys, all of my TeachD members right now, flat out, if you're making money and you're becoming a better trader, type the number 1 in chat right now. Type the number 1 in chat right now if you're making money and you're becoming a better trader because of True Trading Group. Now, all of you that are not members, I want you to pay very close attention to the amount of number 1s that are about to come flying through the side of the screen right now. These are my TTG family. And I do not use the word family lightly. We all care about each other. We help each other. We strive to help each other reach our goals. That's what being part of the TTG family is all about. And the amount of people, all these people that are typing the number 1, this is the reason why I can offer you that money back guarantee without breaking a sweat, because well over 80% of our members are successful. Here's the deal. If you commit to me, I'll commit to you. If you go through all the courses, pass the quizzes, and attend 1 private study group, that's all I'm asking for you to do. If you do those 3 things and still do not make back your membership fee, okay, I'll give you all your money back. I'll say this again. If you go through all our courses, pass the quizzes, attend 1 private study group, put in a little effort. That's all I'm asking. Just put in a little effort. And if you still don't make back your membership fee at least once during the membership, I'll give you a full refund. That is how much I believe in this program. That is how much I stand behind the platform and the education that we provide inside of True Trading Group. Everything I'm saying to you is on the website. You know, you're getting exactly what I'm saying here. Lastly, if you do not want the laptop and want an extra savings, okay, if you don't want the laptop and want an extra savings, you could text my partner Adam at 201-775-9702. Okay? He is standing by to help answer your questions. So if you do not want a laptop, we have 9 of them left. But if you don't want one, you can send a text to Adam 201-775-9702. The number is displayed right there at the bottom of the screen. If you guys have questions, or if you do not want a laptop and you're still interested in the membership and you want some extra savings, you can send a text message to Adam right now and he can help you. Okay, so that's it, guys. All right, that's it. Now, what I would like to do is I'd like to move on now to the lessons of the live stream, and that's going to be EFTR. And EFTR, man, oh man, oh man, oh man, what a trade. For this, let's go to my screen. Let's go to my charts. Let's share the screen so you guys can see. Oh, we got a new member, Zachary. What's up? Everybody welcome Zachary. Zachary is our newest member of the True Trading Group family. That means we only have 8 laptops left. So everybody welcome Zachary. All right, everybody welcome Zachary. Welcome Zachary to the TTG family. 8 laptops left, folks. Remember, TTG121 coupon code to get the 42% discount, the brand new laptop. Attend Options Palooza with our 2 top option traders, and also have a chance to win 30 grand or a brand new Tesla on Sunday the 12th. Okay, EFTR. Let's go to the charts. Okay, here we go. Now, the lesson that we're going to talk about here again, guys, is how to use volume to identify a buyable pullback. That's going to be the lesson we're going to discuss here today. Now, I'm going to zoom this all the way in so you guys can see this very clearly. Here is yesterday's high of the day. There's yesterday's high of the day. Okay? There it is. High of the day yesterday. Today, EFTR made a little bit of a run. See, I made a little bit of a push here today to get up and test yesterday's high. So now you'll notice, okay, yesterday's highs line up with today's highs. Right? You guys see that? Yesterday's highs line up with today's highs. What occurs next tells me everything I needed to know that this was a buyable pattern. Told me everything I needed to know that this stock was going to continue higher. And we're going to talk about using volume to identify buyable pullbacks. First and foremost, EFTR broke through the initial morning high, or I'm sorry, not the initial one, the previous high of the day. There's your previous high of the day, previous high of the day. We broke through it right here and had a nice increase in volume. You will notice that the volume that came in during this surge was heaviest volume of the day. That in itself is a sign of strength. Now, that was a sign of strength to me, but it was not enough to get me to pull the trigger. I'll explain why in a moment after we welcome Joe. Everybody welcome Joe. Joe is our newest member of the TT family. Everybody welcome Joe. That means we now only have 7 laptops left. 7. Only have 7 laptops left. Okay. We'll have 7 laptops left. Actually, I would like to just take one quick moment and answer a question. Abigail wants to know, so what happens to the other 20%? The other 20% of the members that Abigail is referring to, I want to make sure that this is something that is very clear. Like I said, over 80% of our members are successful. It means they're making money, they're becoming better traders, which means a little under 20% are struggling. But at True Trading Group, we leave no trader behind. And every single month, we hold what we call red to green workshops. The red to green workshops are where any member that is struggling, they submit questions and topics that they are struggling with. And the moderators and myself will host a live workshop with those members and cover those lessons and those topics live so they can get the help that they need. We leave no trader behind in True Trading Group. Everyone is family. We will work with struggling members to help them. I know it's not possible for 100% of our members to be successful. I know that's not possible, but that does not mean that I can't try for it. I don't sugarcoat anything. I tell you guys how it is. I'll always shoot you straight. Okay? So moving back to EFTR. Okay, and moving back to EFTR. Okay, now, like I said, this told me the stock had some strength, but it wasn't enough to get me into the trade. Why was it not enough to get me into the trade? Because we were approaching lunchtime. Now, I don't like lunchtime breakouts because lunchtime breakouts tend to fail more often than they give you follow through, unless it's accompanied by the heaviest volume of the day. The reason why a lot of lunchtime breakouts tend to fail is because volume is typically lighter during lunchtime, right? Volume is usually lighter during lunchtime. If a stock has lighter volume, it's going to have a more difficult time getting follow through and gaining momentum. You need volume to gain momentum and to have follow through. So that is why a lot of times lunchtime breakouts fail. So the time that it's okay to go after a lunchtime breakout is when the volume is the heaviest it's been the whole day, right? Because that solves the problem. The problem with lunchtime breakouts is that sometimes the volume is lighter, and that results in failed breakouts because there's no momentum, there's no follow through. So when you remove that problem, meaning the volume's the heaviest it's been all day, now that makes it an okay pattern to go after. That is the only reason why I did not buy EFTR in here, because we were approaching lunchtime and I did not want to get caught in a failed lunchtime breakout. So what did I do? I waited. I waited for a grade A setup. A grade A setup is going to be the highest probability pattern that you can find. And all of a sudden, we break through the high of the day. Not only do we break through the high of the day today, we also broke through yesterday's high. Okay, we also broke through yesterday's high. Now, as I zoom this in, what you will notice is what? The volume that came in on that break. Notice how it is the heaviest volume that EFTR has traded at any point during the day. That was the sign for me that this stock has momentum. Now I feel a lot more confident stepping in and buying this stock. Now, the amateur would say to me, well, yeah, but Mike, you bought the stock right here at $20. You could have bought it here at 17. I am sacrificing price to gain probability. That is one of the things I want you to take away from this. Remember, if a stock is truly strong, you'll get more than one crack at it, right? If a stock is truly strong, you'll have more than one opportunity to buy it. In this situation, yes, could I have bought it down here at $17? Would I have made more money? Yes, I would have. However, the probability of the stock moving higher with a chart that looks like this is less than the probability of a stock moving higher with a chart that looks like that. So I'm sacrificing price to gain probability. As traders, our goal is to put ourselves in the highest probability scenarios as we possibly can. That is our goal as traders. So we're talking about using volume to identify buyable pullback. So after we broke through the high of the day, you'll notice, right, easily the heaviest volume of the whole day. It's very clear, easy to see, right? Heaviest volume of the whole day. So now what does that tell me now? Now I say to myself, guys, that I'm going to be looking for a pullback, okay? We're going to be looking for a pullback back down to this previous high. Why? Because when a stock breaks through the previous high, or any resistance level for that matter, the heavier the volume that comes in when it breaks above that level, the greater the chance that that previous level now becomes an area of support. So what I start doing now is I say to myself, okay, guys, I'm looking for a low volume pullback now back into $20. Why $20? That's your previous high. This previous high was like $19.60. This previous high is $20. Call it that $20 level is where I'm looking for the pullback. Okay, so what starts to happen next? We start to get a little bit of a pullback, but I'm still waiting for my buying zone. My buying zone's right down here at $20. And again, guys, I said this on the microphone. I told all my members in your trading group that I'm looking for this pullback. Okay, I told everybody I'm looking for this pullback in front of $20. I'm looking to be a buyer right there. My stop loss is going to be around 18. Why 18? My VWAP, my 50 fib levels are sitting there. And then finally, bang, we get that pullback. We get that pullback. Look at that pullback, drops right down into my buying zone. I had an order sitting out there at $20.27. Bang, filled on the pullback. My stop loss, folks, was going to be right there around $18. There's the entry. My stop loss is going to be right there around VWAP, $20.27. I'll give you the exact timestamp, 12:42 p.m. 12:42 p.m. There we are, long at $20.27. This was actually a ridiculous entry. This was such a ridiculous entry. I was really proud of myself on this one. I was actually conducting a one-on-one with a member. Like I said, we do one-on-one mentor sessions with lifetime members. I hold 2 of them a day. And I usually have one around 12:30, right around lunchtime. And as I'm on my one-on-one, I'm talking to my member, and I'm telling them that I'm about to step in and buy this thing. So I was actually on a one-on-one while with a member trading this thing live. And then, of course, I'm on the microphone talking to our members. I'm sending out the trade alerts. And there was the entry at $20.27. But how do we use volume to identify buyable pullbacks, right? That's what we were talking about. How to use volume to identify buyable pullbacks. I want you to pay very close attention and take a look at these volume bars. I'm going to actually expand the volume so you can even see the volume more clearly. And the really thing that I want you to focus on here is the difference and the discrepancy in the volume while the stock was moving higher to new highs, right? Versus the volume that came in when the stock was experiencing its pullback. Okay, so what you will start to notice here is that the volume during this pullback is extremely light. You can see right here. You see how this pullback, you see how the price is beginning to pull back? Renee, welcome. Everyone welcome Renee. We now only have 6 laptops left. Everyone's grabbing these laptops. Guys, 6 of these, we have 6 left. That's it. They're gone. We have no more after that. We have no more laptops after this 6 are spoken for. Remember, coupon code TTG121. You actually have to you have to actually enter the code, click apply code, and you'll get one of those laptops. Okay. So there you guys have, okay. This is what I'm talking about using volume to identify buyable pullbacks. The volume on the way up is equally as important as the volume on the way down during the pullback. Because again, look, I'm going to delete the whole chart. All right. Just so I can make this, more clear so you guys can see this better. Notice while the stock is moving higher. Okay. Notice while the stock is moving higher, look at the volume. Okay, look at the volume while the stock is moving higher. Then notice when the stock is moving down. Okay, notice how now the stock is moving down. Notice the volume. Do you see how low the volume is on that pullback? That's what tells me this is a buyable pullback. This is what tells me this is a buyable pullback. Using volume to identify the buyable pullback. That's why I stepped in here in front of $20, and that's why I got long right there at $20.27. I had a limit order sitting out there while I was on my one-on-one. We got a quick pullback, got my order filled, and then the stock immediately bounced. This was absolutely perfect. Perfectly executed. Perfect chart setup, was absolutely incredible. And the rest is history. The stock absolutely explodes. We start ripping profits off the table, 23.87, 25.70, 27.20, 29.13, final take profit, 31.55. 31.55, that is the final take profit. That is a 56% gain on the final take profit at 31.55. Remember, I'm taking profits all along the way. I literally took profit here. I took profit here. I took profit here. I took profit here. There you have it. I'm missing one right in here. So there you have it. There's your take profits, guys. There they are. Just an absolute beautiful move. Absolute beautiful move on EFTR. And it all goes back to using the volume to identify buyable pullbacks. Using volume to identify buyable pullbacks. Guys, my THD family, if you guys made money on this thing today, sound off in chat and let me know how you did. You know I love to hear your stories. You know I love to hear it. So if you guys made money today, sound off. Let me know. I'd love to hear about it. You guys know I always love hearing about your guys' success when we hit a home run like this. So you guys could fire it away. Let me know if you guys made money today. I would love to hear about the money that you guys made today. I love it. Boom. Yes, 25% gain, 60% gain. Very, very nice. 6K, baby, for Ikra Koya. Great job. Great job. Yes, just got back for Lloyd. 2K. Great job. Yes, Plur Trader got in even before I did. Great job. A 58% gain. Yes, I made some money, but I ain't telling. No problem, Trader Allen, man. Keep it to yourself. Humble. I like that, brother. Stay humble. Stay humble. I don't like to kiss and tell either, man. I don't like to kiss and tell either. Great job. Excellent job, everybody. Really, really, really great job. So, take this, learn from this. Learn from this trade. This is an amazing trade today. It all goes back to using volume to identify viable pullbacks. This is a lesson you guys can use in your trading as early as tomorrow. I hope this was helpful. That's my goal on all of these live streams. So listen up, folks. Remember that 1-year membership, it's normally $2,212. But from now until midnight tonight, you can save 42%, brings the price all the way down to $12.82. That comes out to about $3.50 a day. That's less than a cup of coffee at Starbucks when you think about it that way. You get full access to the mods and myself. Remember, Netflix of trading communities, pay one price, get access to everything all of our core things that we have as a member to Trading Group. Remember, as a member, you're going to get access to the premium trading tools and products because we bundle them together as part of your membership. I'm going to show you guys real quick now what the THD platform entails. I want to show you guys what it looks like. I want to show you what's included with your membership. Okay, so included, you're going to be getting that Benzinga Pro real-time newsfeed. This is a live breaking up to the second news alert service directly inside of our chat that gives you news as soon as it crosses the wire without delay. You're going to be getting news at the same speed of which the professionals do. This is important when you're going to be an active trader. The speed of which you get news matters. It gives you an advantage over the rest of the crowd. Traders that get the news first win. This helps you win, plain and simple. You're also then going to get access to Quote Stream's full book level 2. This is going to help you see all the market makers inside of level 2, not just the ones your broker shows you. That's also coming part with a trade simulator that lets you trade stocks and options with fake money with real-time data so you can practice implementing what you've learned in the courses. Guys, use the simulator. Practice, right? Practice. You can practice trading with fake money. Prove you can make money on the sim before you start trading with your hard-earned cash. This is the same simulator that's used at California State University, Fullerton, University of Wisconsin, Whitewater, Berkeley Haas, Illinois Tech. Use it. It's there for you. You're also going to be able to get our Trade Ideas scanner. This is going to show you stocks making new highs, new lows, stocks that have unusual volume activity. It's going to be broken down between small cap, mid cap, and large cap. Whatever you trade, we can make sure that you're always focused on the hottest stocks during the day. You also have access to our proprietary scanner that has all the functionality of FinViz Elite with the power of streaming data from our partners at Quote Media. You'll be able to view our presets, create your own presets, scanners, save them. You can follow along as myself and the rest of our Pro Trader moderators share our scanner setups with you in real time. This also includes the ability to download unlimited analyst ratings on any stock that appears in the scanner, all brought to you by our partners at Quote Media. You can actually click on a stock. It'll show you what all of the analysts are saying about the stock. Or the analysts, how many have a buy rating? How many have a sell rating? You get all this information right there on the THD platform. And oh yeah, by the way, the crypto scanner info is now on that scanner as well. Then speaking of scanners, you also get our social sentiment scanner. Guys, literally all these things I'm showing you, these are all included with your membership. You do not pay extra for any of them. They're all included. Our social sentiment scanner scours today's top social medias like Reddit, okay, the Wall Street Bets, StockTwits, Twitter, to see what are the top stocks that are being discussed. What stocks are being mentioned on social media the most? This scanner will show you that. It'll then show you other information like what percentage of the float is short, what's the size of the float, are there options on the stock, and so much more. This is a game changer. This information used to only be available to the professionals. Now it's available at the fingertips of my TGD family. I love it. You're also going to have access to our TradingView premium charting software. One of the most commonly used charting softwares by active traders, yours free. You're getting it also a minimum of 10 easy to follow, actionable, real-time trade alerts per week from a community of traders currently sporting well over an 83% win rate. We are fully transparent inside of True Trading Group. All of our moderators are required to upload their trading activity from each day, which tracks every buy and every sell that they make. This way you can follow along and check to see how you would be performing if you followed along with all of our trade alerts. Fully transparent. The journal is right there for you all to see. You're also getting those 2 small private study groups with a TeachD mod, your chance to get individualized attention, get help with lessons and topics that you really are struggling with. Then you've got the 17 course curriculum. Adida, everyone welcome Adida. Welcome Adida. 5 laptops left. That's it. Everyone welcome Adida. TTG121 coupon code. Everybody welcome Adida. We only have 5 laptops left, and then that is it. No more. We're done after those 5. Then you have the curriculum, guys, 17 courses, simplified version of the stuff I learned working at the fund in New York. It's broken down into beginner and foundation courses, advanced courses, options, swing trading, trader psychology, crypto, all in text and video format, whichever is easier for you to learn. There are no VIP pro courses that will cost you more money. You get access to all of the courses when you join our annual membership. Okay. Then on top of the courses, you have a video library that's got well over 100 hours of additional educational video content. These are some of those workshops like Options Palooza. That's September 11th from 9 a.m. to 5 p.m. Eastern. That's going to be hosted by our 2 top options pro traders are going to be hosting this options workshop. It will also be recorded. Okay. Some of the topics that we've covered is like how to grow a small account, how to trade while working a full-time job, how to resist FOMO, just to name a couple. They're all right there inside that video library, all free, included with your membership. Check them out. Then, of course, access to our chat room where the moderators and I share our screen. We're live in the microphone. We're calling out trades. We're identifying opportunities. You can send us private messages. We're there with you the whole day. All right, guys, listen, the price of our membership continues to be walked up by a couple of bucks till we cross over 2K. With all these new platforms, these new things that we're adding, it costs us a lot of money to keep, putting these services and these tools on the platform. That's why we have to keep raising the price. But the price you pay today is the price you are paying for life. You have to make sure you understand that. Next year, if our membership is $2,500, you want to renew your membership. Guess what? You only paid $1,282. That's the price you paid today. You will not have to pay $2,500. When you lock yourself in at $1,282 price point, you are grandfathering yourself in at that price for life. Okay. Even when we are $2,500, the value you're getting is actually insane. At the $1,282 price point, which is what you can get right now today by using coupon code TGD121, it's ridiculous. Let me put things into perspective. Let's say you don't join True Trading Group, but you really like that Benzinga newsfeed. Benzinga charges $1,400 a year for that newsfeed. You get it free with your membership. Your membership is only $1,282. That's the value of a True Trading Group membership. That Quote Media's full book level 2 is $990 a year. The Trade Simulator is $300. TradingView's premium charts are $600. That's over $3,200 a year just right there on those 4 tools. I haven't even talked about the social sentiment scanner. I didn't talk about the trade idea scanner. I didn't talk about our own proprietary scanner. I didn't talk about the courses, which is the education I learned working at the hedge fund. I didn't talk about the over 100 hours of additional educational video content. I didn't talk about the workshops. I didn't talk about the one-on-ones. I didn't talk about any of these other things yet. So when you want to talk about the value of a TGD membership, it's actually insane when you think about it, that you can get all these things for the price of a cup of coffee a day. That's what it comes out to. It comes out to about $3.50 a day. Our goal is to disrupt this entire industry. In order to do that, we have to provide insane value and results because, again, TTG is about results. But it has to be at a price substantially less than any of our so-called competitors. It shouldn't cost you $10,000 in order to get an education like this. It's ridiculous. So we want to make sure that everyone, the retail trader, can level the playing field and get themselves and have access to the education and platform and resources and tools that can help them level the playing field to let them become consistently profitable traders. That is what TTG is all about. Don't forget, you have that money back guarantee. I am so confident that this can work for you. I stand behind my program. I put my money where my mouth is. So if you are willing to tell me, Mike, I'll commit to the TTG family. I'm going to give this a shot. Great. Here's the deal. If you commit to me, I'm going to commit back to you. That's what family does. Family makes commitment. That is what we do. I will commit myself, the moderators, the members, the education, the mentorship, the tools, the resources. I will commit them to you. You have to give me a little effort. All I ask from you is to go through the courses, pass the quizzes, attend one private study group. That's it. If you do those 3 things and still do not make your membership fee back at least once, I'll give you a full refund. I will give you all of your money back if you don't make that membership fee back. $1,282 here tonight. And I can do that without even breaking a bead of sweat because our members are making money. It's that simple. If my members weren't making money, I wouldn't be able to offer you a money back guarantee. I'd be an idiot. Since we started tracking this stat, here's the numbers. Of the last approximately 4,700 members that have joined True Trading Group, I'll say that again. Of the last 4,700 people that have joined, the TGG family is about 7,400 strong at this point, but we started keeping track of this statistic about 4,700 members ago. We have only had to refund 109. Yeah, I'll say that again. Of the last 4,700 members that have joined, we've only had to refund 109 people. That's 2%. 2%. TTG121 coupon code, guys. What do you guys have to lose? Honestly, think about it. Seriously, let's weigh the risk reward for a second. Worst that can happen. Join True Trading Group. Get a free laptop. Don't make back your membership fee. I give it back to you. You got a free laptop. Best case scenario. Join True Trading Group. Get a free laptop. Become a consistently profitable trader. Reach financial goals you never thought were possible. Weigh the risk reward. Is that a trade you're willing to make? Are you willing to pull the trigger on that? Trading's not a get-rich-quick scheme, folks. You're not going to join True Trading Group and become a millionaire tomorrow. I'll never sugarcoat anything. I'll never blow smoke up your ass. I'm not going to tell you, follow me and you'll make $10 million. I'm not going to say that. Okay? Antonio, welcome to the TTG family. We still have 5 laptops left. Antonio did not take a laptop. So there's still 5 laptops left, guys. You can use coupon code TTG121. Get yourself one of those brand new free laptops. All right. Guys, check us out on Trustpilot too. We're 5-star rated on Trustpilot. Well over 1,300 people have taken the time out of their day to leave us a review on Trustpilot. I welcome, encourage, I invite you all, go read some of those reviews. There's no better referral than that of your peers, which is why I ask members questions on these live streams. That's why I tell you guys to go check out the Trustpilot page. It's better you guys get these reviews. Yep. See, my dog's telling you too. My dog is also telling you to go check out those reviews. All right. So there you have it, folks. That's it for me. I hope this was a great live. I hope. I know this was a great live stream because it was an amazing live stream because it was badass. We had Steve Liesman on the live stream. We talked about a bunch of macroeconomic stuff. We went over an amazing lesson on EFTR, which was a home run trade today. What do I mean? I hope this was a great live. I hope you guys liked it. I know you liked it. Smash that like button, guys, if you liked and enjoyed this live stream. Subscribe to the channel. Turn on those notifications. Use that coupon code TTG121. Remember, you actually have to click apply code to get the 42% discount. You'll know you're getting a laptop if you see a laptop in your checkout cart. If you see the laptop in your checkout cart, that means you're getting a laptop. If you do not see the laptop, if you do not see the laptop in your checkout cart, that means that we have completely sold out. Okay, guys, listen, again, if you do not want the laptop and you want some extra savings, you can just text my partner Adam at 201-775-9702. The phone number is right there at the bottom of the screen. You guys can just send him a text message. He is standing by to help you. He can also help answer maybe some questions that you guys have regarding a membership. He'll be more than happy to help. So you guys can send a text message to that number right now if you guys have any questions or if you do not want the laptop and you want some extra savings. Otherwise, use coupon code TTD121. Get yourself the brand new free laptop. We got 5 of them left. Thanks for joining me tonight, guys. I love you all. I'll see you guys all in chat tomorrow. Later, guys.